Welcome to our webinar about the pandemic protection gap, a discussion about the future of business interruption insurance. This event is organized by the European American Chamber of Commerce, New York, and my name is Yvonne Bendinger-Rothschild. I'm the Executive Director of the EACC, and I will be your host and moderator for today's event. Our panel today includes Joaquim Ruiz-Echuri. He's a partner at Perez Lorca in Spain. We have Chris Specholt, a partner at Thomson Hein in the US, Catherine Derrick, a partner at McCann Fitzgerald in Ireland, and John Lavelle, he is a director at BPL Global, and he is joining us also from the US today. So pandemic, the business interruption insurance obviously was a super hot topic during the pandemic. Companies were trying to get, not coverage, but trying to claim on coverage for the disruption that that the COVID pandemic caused to their business. And what's the state of play right now in Europe? Joachim, if you wanna start from the European side, and then we'll pull in Catherine to add to your analysis.
Yeah. Well, it's difficult always to talk in terms of such a thing as Europe, because we are multiple jurisdictions at the end of the day. But it is true that we observe the neighbor countries like Spain, France, Italy, Germany, and also because this is still part of the European continent, the United Kingdom. From the very beginning, there was a strong debate at the very beginning of the pandemic and the confinement. There was a strong debate about the absorption or not by the private insurers of the business interruption, the loss of profit affecting such a multiple, not only big business but a small business, restaurants, bars, etc., etc. Just to give you an example, in some of the continental European countries, we have a specific mechanism for catastrophic events, but this mechanism do not provide any kind of coverage for pandemic. Pandemic until today was completely forgotten by pools, reinsurance pools, public and private reinsurance pools covering catastrophic events in Europe. They were designed for earthquakes and this kind of climate events. So the pandemic was something where there was not a public insurance response, if you wish, and the private insurers, in the most part of the continental European region, they built up the coverage under the idea of a physical damage to a thing. A restaurant can suffer a damage if there is a fire. A restaurant can suffer a damage if there is a robbery. But a situation where the restaurant cannot operate because the pandemic was simply out of the policies. Nevertheless, the debate existed, and there was a strong judicial debate in different jurisdictions, still ongoing. And I will, if you wish, to not monopolize the time, I will go in depth about this judicial debate later on.
Yeah, and the one of the major differences this time around was also that some of the business closures was dictated by the public sector. So it's not that the companies closed because they couldn't open. A lot of restaurants, for that matter, were able to open, but weren't allowed to. So that was also, I think, a major difference between this, situation and in the past.
Correct. That's an excellent point. Yeah. But sometimes, in the insurance policies, there is a provision about the public authorities, issuing an order to close a business for multiple potential reasons, but nothing compared to this global order that we receive from each state government and local government to cease all the activity or to accept customers going to the restaurant. Yeah, this is a good point.
Yeah. Catherine, out of Ireland, what did you see there?
Yeah, so I mean, I suppose the backdrop really, as we've already touched on, is that business interruption as a form of policy was more typically witnessed where there was damage to property, and so and there was actually very little case law on business interruption in particular, and that was, I mean, for a whole variety of reasons, but you know, often many of these things are compromised at an early point. So there were a lot of unknowns, I suppose, when the pandemic arrived, and so given, I mean, I suppose at the beginning of the pandemic there wasn't a public option available in terms of cover. There was a lot of close examination of the various policies, and some policies, all of the policies had quite different wording, and some policies were very much focused on where there was actual physical damage to premises and that the cover was available for that. And in other cases, it was wider, and the non-damage perils were also, there was also coverage for those. And that's really where we saw the more interesting case law, and which was the subject of litigation. And it was interesting that the position that arose in Ireland was very similar to that which arose in the UK. And there were different interventions from the state in relation to what was arising. And so certainly there were a lot of claims in Ireland, and our central bank here in Ireland introduced a framework, the Business Interruption Insurance Supervisory Framework, which was intended, I suppose, to express views and give some certainty at that point, particularly given there was such scrutiny internationally and in Ireland, and a whole series of cases. And through that, the central bank gave regulated financial services providers, and so the insurers, their views on certain topics. And just related, I suppose, to the point that you touched on, Yvonne, one of the things that was in debate was whether the government direction to close, what was that? Was it meeting the terms of particular policies? And it was interesting that in the context of the framework document, which our central bank issued, they were very clear that they regarded the direction of government, which wasn't something which at the time of the closures had been legislated for, was the central bank's view was that that was sufficient, I suppose, to be a government order. But in Ireland, what we saw was that the central bank came in and it expressed views, and obviously those aren't necessarily binding, but I suppose when your regulator expresses a view, the regulated service providers pay close attention to that. And it also introduced a mechanism whereby what it really emphasized was that it should be a customer first focused approach in terms of the consideration of the claims, both in terms of interpretation issues where there were ambiguity, but they also gave a view which resulted in there being cost comfort for cases which were brought for plaintiffs whereby they were test cases, and where it was felt that the result of those cases would have a wider impact or import across other cases in the market. And that there is a difference between the UK and Ireland, because in the UK it was actually the regulatory authority itself which brought the test case, and that was a very sophisticated process there, I suppose, in terms of what was done, whereby they brought one test case which sought clarification across a whole range of policies and covering a whole range of insurers. Whereas in Ireland, it was actually individual claimants who were bringing the cases, but there was an intervention by the regulator to express its views and in relation to costs also. So that's really broadly kind of the backdrop of where things were sitting. And then in the context of, I suppose, the very significant case that we had in Ireland, again, I suppose what the court did was clarify a whole variety of issues which are applicable to the particular claims, but also have a wider application in the context of insurance policies. And so they were looking at the points of proximate cause, concurrent causes, the but-for test, all of those things that probably have arisen across the jurisdictions. And ultimately, the views formed in the UK and in Ireland were really quite similar, which was interesting after kind of complicated processes on both sides and different policies and different insurers, that's where we landed, but very interesting nonetheless.
Yeah, interesting. Christopher, in the US, did we just decide to tackle this via the funding from the government to bail out companies in their in the loss of business, and or are we planning to change the insurance market in the U.S.? What was the approach?
Here in the United States, there has been some discussion about at the federal level putting into place some legislation that would, provide insurance cover for pandemics, but it has not gotten any traction. But the insurance industry's position here in the United States is that a pandemic is an uninsurable event because it affects policyholders everywhere at the same time. And the insurance industry has opined that their reserves are only at about $800 million, and if they had to pay business interruption claims of the type for COVID-19, the run would be between $250 and $300 million per month, and they would be out of business in basically 90 days. Not dissimilar to what's happening over in Great Britain and in Scotland. Here, the insurance industry has relied upon the verbiage in the insurance policy, the property insurance policy, that requires that there be direct property damage or loss in order for there to be a potentially covered claim. And the insurance industry uniformly has all asserted the position that a virus, that comes in contact, with some property is not direct physical loss or damage. They have taken the position that it's not dissimilar to any other virus that can simply be cleaned off with a disinfectant. And what has happened is that as of yesterday, there have been 1,405 lawsuits filed here in the United States by policyholders against insurers seeking coverage. And of that 1,405, 795 have been dismissed by the courts, and 141 have resulted in motions for summary judgment being granted by the trial court in favor of the insurer and against the policyholder. So basically, approximately 67% of all of these lawsuits have, been dismissed or ruled in favor of the insurer. And in reviewing, the case law, the reported case law here in the United States, the takeaway is that all of the federal courts have basically held that there is no coverage. The federal courts have adopted the position more or less uniformly that in order to have a covered claim under the direct physical loss or damage requirement, you need to have property damage that results in an alteration of the property. That's the operative language that they seem to seize upon. And a simple virus, that is on, property is not any type of alteration of property, and therefore they find no coverage. Having said that, there have been a few, when I say few, less than 6 reported cases where the policyholder has been able to get some traction and has avoided either a motion for summary judgment or has convinced an appellate court that it should go back for trial on whether or not the actual policy provides coverage. And basically the themes of cases rely upon the language is ambiguous, what constitutes direct physical loss or property damage, and therefore, because it's ambiguous, it's a jury question as to whether or not, in fact, there should be coverage provided. Other courts have decided as a matter of law that there could possibly coverage because the allegations in the complaint do allege some kind of alteration of property when you get a virus on the surface level in a restaurant or in some other place of public assembly. But I can tell you, with one exception, there is no policyholder that's gotten 1 penny that I'm aware of here in the United States for COVID-19 insurance coverage. And the one that I'm aware of that has, at least resulted in potentially some coverage was a case that was just decided about 2 weeks ago down in Houston, Texas, where Baylor College of Medicine was able to get a jury verdict against the XL Insurance Company for some $48 million in business interruption. Not surprisingly, XL Insurance Company is saying it's going to take an appeal to the appellate court, so it remains to be seen whether or not they get to hold on to that verdict. But I can tell you that on behalf of clients here at Thompson Hine, I submitted well over 70 claims for business interruption coverage, and I got 70 denials.
Wow. Wow. I mean, I think the alteration on property is really an interesting, interesting in terms of the language. Because if you think about it, if you cannot enter your building, which was the case at the New York Times building, we were not allowed to enter the building. So that turned our office, that alterated our office into a storage facility, because we couldn't use it as an office. We could only store our equipment there and our furniture, etc. Is that not an alteration of of the property?
Well, I think the alteration that the Eighth Circuit Court of Appeals in oral surgeons identified was the type of alteration one would see from some kind of event like a fire, a tornado, a hurricane, or something like that. It wasn't simply an altered use. They would probably label that as an altered use as opposed to a, some kind of destruction of the property, which is where they were focused.
Yeah, no, of course. John, from the insurance side, how do you see the situation?
Well, yeah, thank you. I think, in the United States, we also have a dichotomy of 50 states and 50 regulators and 50 governors who basically took different views as to what was going on, whether closed down or not closed down, which made the whole thing a lot more complicated than needed to be. Because, yeah, again, unfortunately, like in Ireland and the UK, you have one regulator. Here in the United States, you have 50 insurance state commissioners. And each commissioner has a different view and different take on the particular issues of the pandemic. In my little world, where we deal with political risk insurance, there is a BI. So in essence, the pandemic, if we had the pandemic and that then had political violence happen where people would protest and burn down the buildings, then the BI would have came into play. Because there was political violence, and if that company had the policy, that would have happened. So, for instance, as an example, we have a restaurant, and all of a sudden, people take to the streets. They're upset. They don't want to be locked down any further, and there's rioting, and they basically destroyed the property. And again, we're usually in emerging markets, so this would be not in the U.S. This would be more in the emerging markets of the world. That coverage would kick in because many of these political violence policies, what we call political risk policies, have what they call a BI rider on them. So for the most part, that would come into play. But I think, what really made the U.S. more complicated was the whole idea of the 50 various insurance commissioners and their governors, because again, the commissioners are mostly all political appointees and they serve at the will of those governors. So they were basically dictated by the governor as far as the view of whether it was full lockdown or not. The only one we have in New York, and I don't know if anybody remembers, there's a company called Century 21, which was a great department store here in New York City. They sued for $175 million on their policy and it was thrown out in the state court. And so that was the first one that we saw in the state. Actually, state insurance regulators actually basically said they didn't have it and sided with the insurance carrier in that particular case. So again, where I am in my little world, it's not the P&C world, but I do talk to the colleagues in that particular area, and they did see that. And by all means, our esteemed colleagues in the law know more than me in that particular area of how the courts and how the regulators looked upon this. But I think that was the issue that we saw from our little world about in the U.S. about the regulations that overriding, so to speak.
So thank you for that. So I mean, we had a little bit of political rioting, but I guess it wasn't related to the pandemic, especially not in New York. But what should we expect from the policymakers, in terms of how we're going to address this in the future? Because I mean, I think we would be hard pressed to think that there's not going to be another pandemic or similar situation that we may expect from, or that we should expect going forward. And Joachim, I'm starting with you. What's happening in the European member states, and what are we seeing from the European Commission to address this? And then obviously keeping in mind that I think it was Catherine who said that the payout is just incredibly high. it's almost impossible, for insurance carriers to cover such a, global incident.
Yeah.
How are we going to address that?
The European Union, through the European Insurance Supervisor, EIOPA, is indeed working in what they call the insurance gap, meaning those those fields where there is no public insurance response, and also the private insurance response is pandemic is one of them. Pandemic is one of them because the reaction in a lot of European insurance markets by insurers has been to clarify, to modify the insurance policies, introducing pandemic exclusions, where in the past, they were not so common. We have seen pandemic exclusions in the past, but right now, due to pressure from
Joachim, your audio went out. Joachim, your audio went out. Yeah, Joachim, we can't hear you. So while you fix that, Catherine, do you want to jump in for a second, and while we're getting Joachim's audio fixed up?
Sure. I mean, there is just a difficulty because an insurance gap has been identified, and if you're an insurer, I'm not sure, a private insurer, why you would agree to cover the gap. And I think one of the what were the lessons, I suppose, that have come through from the litigation in Ireland? And again, I suppose just to reference that the litigation where there was success in Ireland was in relation to, it arose specifically related to a provision whereby there was an indemnity where businesses were affected by an imposed closure of premises by an order of a local or government authority following an outbreak of a contagious or infectious disease on the premises or within a 25-mile radius of same. So just to some of the points already mentioned, it is very much dependent on the particular policy wording. And there were other policies certainly which weren't reactive to the pandemic circumstances. And I suppose in looking at where the differences were, really, I suppose there was a debate around potentially a lack of inner limits, and also I suppose potentially that indemnity limits were quite long in terms of the policies where there was coverage. And so I suppose one perspective is that there is a gap, but that the private insurers are not prepared to fill that gap, and that there may be a lack of this type of insurance at the moment for pandemics. When we've all forgotten about this in 20 years, maybe we'll all start facing the same problems again, and hopefully somebody might have kept the research files. But that is just a challenge, I suppose, and it's an understandable one for the private sector. It's understandable in many ways why the private sector would take that view. I don't know whether Joachim, you're back in action.
Yeah. I think I'm on again. Apologies about that. Yes. This problem, the insurance gap, has been detected, and there is an ongoing debate in the European Union. But for the time being, for instance, in Spain, the Public Compensation Consortium, which is an entity, a public entity offering direct insurance for big catastrophic events, is not covering pandemic, and has denied that a debate shall be open to include pandemic in the future. And the insurance companies are simply clearly excluding pandemic related damages, business interruption or whatsoever from the different policies. So right now, if someone wants to let's imagine a hotel or a restaurant, a big player, they will need to probably go to the London market or certain specialized market where this kind of offers still exist, also with high premiums and a lot of exclusions, and yeah, that will be the situation.
Yeah, that's a tough call to make. I mean, I think we're I mean, I don't want to sound alarmist, but I think we need to find a way to address this going forward. I don't think that this is going to be the last pandemic we're facing. And if you look at it, you know, with the energy crisis in Europe, the government is requiring lower energy usage, and that leads to interruption. How are we going to address them?
In the near future, you mean a new situation like this? Well, if there is a new pandemic event in Europe, it will be completely. I would say, you know, the insurers will be better protected, you know, to reject claims by the you know, by the business interruption, because policies that are being issued right now are clearly stating that pandemic events are excluded, you know. The policies that we had in 2020 probably allow a bigger debate, you know, because the exclusion was not there. That's the situation, you know, in a nutshell. Yeah.
But how about the concrete situation right now with the government? I mean, it's I think we're on two sides of the conversation. On one side, we have the pandemic that is the cause of it. This time around, with the energy shortages, you know, there's another reason for the government to tell companies to you know, to save energy, and with that, it may come to production shortfalls. You know, you can. Depending on the type of business or the type of manufacturing you run, how are we going to address that? And I will ask Chris. I will ask you as well. You know, how you see something like that play out in the U.S. But I don't know, Catherine, if you want to comment on that. How is that going to play out potentially?
So as I stated at the start, here in the United States, the insurance industry has taken the position that it's an uninsurable event for a pandemic. And I can tell you that over the last 18 months in the policies that I reviewed on renewal, that every single one of them now has on them either a virus exclusion endorsement or a pandemic exclusion endorsement on them. So the insurance industry at this point in time in the United States is making it quite clear that they do not want to provide coverage for any type of virus-related pandemic. That said, if I look back in time, you know, we look back 20 years or so, the insurance industry here in the United States was not insuring, you know, for any type of environmental liability. But what happened over time was that they developed specialty policies that would provide limited scope of coverage for specific environmental events with specific, you know, limited liability limits. There was always that possibility for the example you just gave, you know, for energy, where the insurance industry figures they can rate the risk and get an adequate premium in order to ensure that they don't find themselves in a situation where everyone, you know, is making a claim for large dollars at the same time. But historically, what I have seen is that when the insurance industry finds itself with its back against the wall, and wants to avoid coverage litigation, one out that they use is to issue coverage, but with, you know, limited coverage, either, you know, scope of coverage being provided or the amount of coverage, the limit of liability is being offered for the particular coverage. So I see that, you know, as a possibility somewhere in the future, but nowhere, you know, at present or anytime in the foreseeable future.
Yeah, but if we take the, I hear you on the pandemic and virus-related insurance, but you know, business interruption can have various causes. You know, I mean, it's like in my example with the energy shortages, there's no virus to be had. You know, this is all about governments telling, you know, the companies, sorry, you can't have all the energy that you need to produce X product, and you might, you know, fall short on delivery, you fall short on your contracts. You know, that's a different form of the business interruption.
And what I can tell you is that, you know, for the exact example you just gave, while I do not see that type of product, you know, commercially available in the United States right now, I do see some captive insurers writing that type of specialty coverage for just that type of an event. So, that may be one alternative in the future, is to find, a captive that's willing to write it.
Yeah. John, what is your take on this?
Well, Ivana, I think on the business interruption insurance, I think that's being dictated a lot by the reinsurers. Most of these insurance companies have to have the reinsurers behind them, and the reinsurers are now stipulating certain key sectors and or areas that they will not cover. For instance, a lot of reinsurers are not looking at coal companies any longer because of the ESG models, that their pressure they're getting from outside lobbyists, etc. So you see that pressure, the outside pressure coming on. But I think reinsurance companies, and these are the huge companies that back up most of the property casualty insurance market in the world, the Allianzes, the Munich Re's, etc. Those companies are pretty much dictating some of these terms as far as not having, a virus or pandemic coverage available under these policies, or business interruption policies, business interruption coverage available when there is a pandemic. And I think that's happening more and more. So you're seeing some of that, and I'll just use like as metallurgical coal, for instance, you're seeing less and less companies offering that. What eventually I think will come into the market is cat bonds. Somebody will be very clever and develop a product and say, okay, can we use cat bonds in this particular sector? Will these catastrophic bonds, is there investors who are willing to take a decent return on that investment with the hope that 10 years there won't be a pandemic and it'll be happy days for 10 years on their investment when they get that return on the investment? So I think there is that, and I did read it in the insurance sector that they do expect this year to be one of the biggest years for cat bonds. Now, where those particular cat bonds will sit, I don't think they will sit in the pandemic coverage, but I think you're going to find it in various sectors. Like, for instance, maybe it will take into the energy sector and help in support of coal shipments that coal manufacturers may put together a cat bond for their sector. So, it's still very much a moving target. I think we're still trying to get all the information together, and I think people are more reactionary still. And I think as the dust will settle, I think we'll see more clear. There's always going to be an entrepreneur company, as Christopher said, that will offer on a captive basis, come out and start offering some coverage, and that is only a matter of time before we do see that emerge in the market. Will it be pandemic coverage or some other specialty coverage that's not available now?
Yeah, interesting. We have a comment from the audience that the U.S. Congress is preparing legislation called PREA, Pandemic Reinsurance Act, similar to the Terrorism Reinsurance Act. So what are we seeing? I don't know, Chris, if you want to start, and then I would like to ask Joachim and Catherine what they're seeing on the European side, if there are similar, developments.
Well, as I said at the start, because the insurance industry here in the United States has taken the position it's an uninsurable event, they have, pushed it off on the federal government, and as you correctly pointed out, have suggested a 9/11 type fund to deal with these kind of situations, since the federal government is an entity that, theoretically could, cover such an event. The problem that I see is that as the Congress currently stands, there aren't enough votes to put that through. And so, but, there's an election coming up in 2022, and, there's an election that takes place every, 2 or 4 years here in the United States. And so with the different congressmen and different congresswomen coming in, at different times, it could change over time. But I can tell you that, what I've been reading to date says that there aren't the votes in Congress today to pass that kind of legislation to deal with, COVID-19. Maybe, looking forward to a different pandemic, something will be in place, but not today.
Interesting. Catherine and Joachim, what are you seeing in Europe? Catherine, you want to start?
Sure, and nothing of any great significance, I suppose. I mean, obviously, within each of the jurisdictions, it is a matter for each of the individual jurisdictions to consider whether something should be put in place. And certainly, I think as matters stand, there has been intervention by the state, but it is with the view to enabling the progress of the private litigation in Ireland, and obviously the FCA case in the UK. But there isn't any wider intervention kind of immediately on the scene. And I mean, it's connected to your other point, you know, around the energy crisis and what is to be done. Because again, query to what extent the insurance industry is going to be the answer to that. I mean, just interestingly, it's not unusual for there to be an extension of cover in Ireland for utility failures, just on the other point that we were touching on. And so it could be that is that there may be cover for a loss of utilities, loss of supply of electricity in a particular blackout situation. But you would also have to recognise, I think, that the energy crisis is well signalled. And so prudently, I would suspect, not having looked at any of those in detail, but I suspect that in a way that there's a tightening of the coverage available in relation to business interruption for pandemics, that those provisions are all also being closely looked at.
Interesting. Joachim, what are you saying?
Yeah, I mirror what Catherine has just said. There is no European joint response on this matter. The main efforts are related to the insurance gap related to climate change. The energy crisis has not been discussed at the European level from an insurance perspective. And the different countries, I would say, have different responses depending if, you know, the event is qualified as catastrophic and you know, potentially falling under a public insurance formula. You know, for instance, in Spain we cover a lot of climate events, you know, or even war and terrorism, but pandemics, energy crisis, etc., are not on the table. From a financial point of view, I have serious doubts about how you can offer a public response to such events, and the private industry simply is not able to produce a credible cover, at least with the current policy wordings we have. Probably with you know, more sophisticated products, you know, parametric insurance, dual trigger insurance, this kind of stuff. We can imagine that in the future there will be a private offering, you know, for at least for some key players like you know, industries. Yeah.
Interesting. Let's get into that a little bit. You know, so the debate between I cover what I cover and you cover what you don't exclude. Do you want to? Who wants to go first on that?
That's a funny. You permit me. It's a funny one because the insurance industry is covering you know, things that are up to a certain point predictable, because from a financial point of view we need to have you know, provisions about things that are possible, and you know, to create also scenarios of probability. So you know, a zombie nightmare is not going to be covered by the insurance industry at all, because you know, people tend to think that you know, you cover whatever that you are not excluding specifically. Well, you can find policies like this, you know, or risk policies in property and casualty can be constructed that way, but it's not the common solution, you know. And overall, it's not the common solution for small and medium enterprises that are acquiring insurance, you know, because people at the end of the day doesn't understand that the premiums we pay, premiums must be affordable and covering all kind of risk, but those that we are specifically excluding probably will have premiums that are higher than anything we can imagine, you know. This is my position here. You know, we must understand the insurance industry as a financial pool that must somehow, you know, have some benefits. Otherwise, the players, the insurers, are not offering coverage, and there is a real problem because people need insurance for sure.
Yeah, true. Otherwise, you end up with self-insurance, putting money inside, and how much money can you put aside? But Chris, do you want to comment on that?
So, as I indicated, you know, beginning in the summer of 2020, for all policies that I was reviewing for renewal or for placement, every single whether or not it was a straight property policy with business interruption and extra expense, or whether or not it was, quote, an all-risk policy, they all had either a virus exclusion or a pandemic exclusion on them. So, going forward, I think, coverage for a pandemic is off the table. In terms of, policies that were written, prior to that point in time, as I indicated, as we sit here today, most cases have been dismissed or been ruled against the policyholder, based upon the fact that the insurance agreement and the property policy requires direct physical loss or damage, and the courts are interpreting that as some kind of alteration of the property. I'm only aware of one all-risk policy where they were able to get around a motion for summary judgment by the insurer, but it hasn't gone any further than that. And basically what the court found out in, I believe it was in Colorado, was that there was a question of fact as to whether or not there was an applicable exclusion on the policy, or whether or not the insurance agreement, was clear enough such that you could say as a matter of law there was no coverage for a pandemic. But to go back to your question, I just don't see the coverage going forward at this point in time.
So we have the pandemic, we have energy or lack thereof. John, how about political risk? So until February 20, I had absolutely no problem doing business in Russia. I could send money there, I could pay my staff there, I could frolic away. Now, completely different environment, political risk. I don't think that anybody is going to believe that there's not going to be political risk going forward. I think the political risk has dramatically increased. What are we seeing in that space?
Great. Two examples, if I can. One of the things I'd like to just show how the insurance industry did respond during the pandemic, maybe not for business insurance. When the pandemic hit, most corporations were basically at a time where they needed cash. They drew down on all their revolving credit facilities, both term loans and revolving loans. A lot of those banks came into the insurance industry to insure those loans against non-payment by those corporates, to keep liquidity, so to speak, so they could do more, so they could keep liquidity in the marketplace. Because that was one of the things everybody was worried about. Would there be enough liquidity with the companies shutting down and having enough cash on their balance sheet? So we did see an incredible rise of banks coming into our market and insuring those particular transactions to allow more liquidity to get into the market from their credit committee. Now, reversing back to where we are today, we are paying, my industry is paying political risk claims on Ukrainian companies at this moment. War risk, confiscation, expropriation coverage because of the Russians taking over certain parts of the Ukraine area. So you're seeing that, and you're also seeing underwriters being very selective and somewhat scared of covering Polish risk right now. If you have an asset sitting in Poland, would that particular company and or insurer want to cover that? So I think it's evolving right now, but we are seeing, and there is a huge amount, and I'm sure you've seen in the Financial Times, the catastrophic risk of aircraft companies, aircraft leasing companies. And Catherine, you'll have one of those companies sitting right not too far from you there in Dublin, that they have almost $1 billion worth of exposure to Aeroflot and these other airlines, where basically they cannot repossess these airlines these aircraft because Russia has basically closed down the airspace and are keeping those planes, mostly Airbus and Boeing equipment, in it. So political risk is now starting to creep into just normal business coverage, where companies are more concerned about, number one, political violence, number two, war risk, confiscation, expropriation, nationalization. I think the Ukraine situation has made people a little bit more aware. And it's not only Ukraine. I think what's really the unknown factor is China. People are more concerned. I'm seeing more corporates concerned about China and what's going to happen in Taiwan and in that particular area than they are necessarily in Eastern Europe. So that's a little of what we're seeing in our little marketplace. And again, we're peripherally the smallest probably part of this overall conversation as far as the market goes.
So what I'm hearing you say is also, it's not just like the regular one layer of risk or one type of risk. It's different layers of risk coming together, and the I mean, I agree with, I think it was Joachim who said that we cannot let these risks not be insured. And we have to weigh that against, you know, the financial burden, which can be, you know, unfathomable, you know, of insuring it. What's the what are we going to do? I mean, you know, how is that going to play out, you know, in the legal space, but also on the policy side? What are some of the things that you're seeing, you know, how things are developing? I mean, we said there's.
I'm sorry, is that for me or is that for just the panel? Sorry.
Yeah, I mean, whoever wants to take it first, we're going to go around.
Well, I mean, there are some events that are simply uninsurable. Asbestos is one of them. You know, you cannot procure asbestos coverage for any price from anyone, anywhere. Similarly, silicosis. For a long time, you couldn't get environmental liability coverage until some, you know, insurers came in and started developing these specialty policies that provided limited scope and limited liability coverage for environmental matters. So at this point in time, you know, it's an uninsurable event, and then the question is whether or not, you know, going forward, as John correctly pointed out, you know, there will be, you know, some individuals, some entities that are willing to accept the risk under a set of circumstances whereby they can feel they can get an adequate premium, you know, for the risk that they're assuming. I can tell you that in the captive world, you know, where I you know, do some coverage forms, one of the critical issues that we always look at is, you know, when we bring in a particular risk into the risk pool, is it one that the risk pool can actually, you know, accommodate, or is it one that if it actually comes to fruition, you know, there's some event, it'll wipe out the pool. So that, you know, that's what we look at, and I think that's the same thing that's going to happen going forward, you know, in terms of, you know, coverage, whether or not it's for a pandemic or for energy or for anything else of that nature.
Catherine, what are you seeing in Ireland and the UK?
I suppose my sense of it is that the problems are still being uncovered. You know, kind of to John's point, whereby what might have been regarded as something which was political risk coverage is actually just rolling out to have much wider impacts. So, and I suppose my sense of it would be that the insurance industry has had a lot to deal with over the last 2 or 3 years. And so I think the thinking isn't really there yet in terms of the solution. I think actually the full scale of the problem is still unfolding.
And but do you
people aren't thinking, but
But do you see the regulators getting onto this, or is everybody still kind of waiting and seeing how things develop? Too early to tell?
I think it's a bit early to tell. I think there's a big appetite amongst commentators, certainly, to you know, there is a push to see what are the governments going to do, what are the regulators going to do. But again, you know, there is a point around scoping the scale of the problem. And I'm not sure anyone has done that fully yet.
Joachim, what do you think?
Yeah, I fully agree. I think most part of the regulators in Europe still think that we are in a war where the major problem for a company is a fire or a robbery, when the major problem for any company right now is a cyber attack. And regulators that still persist thinking that the best way to manage the market is having very solid companies, insurers that are very solid from a solvency perspective. So they don't want to see people that are managing investments in the insurance companies on a risky way, so trying to make profits. And you know, the response to certain new risks, climate change, energy crisis, pandemics, etc., only can only come from a little bit of imagination from the insurance industry, and a little bit of intervention from the public supervisors, you know, allowing new players to enter into the industry, and allowing the insurance offer to become wider. because the insurance gap is there. You know, I'm sure that we are gonna see in the big companies doing captives and other solutions. You know, because the insurance market is not going to respond to their needs. But you know, what about the individuals with the small and medium enterprises? You know, this is really a field where the public supervisors must be thinking right now, because the problem is in front of us. You know, in the last 3 years has been a big lesson for all of us, and unfortunately, I don't see a very rapid and smart reaction in the continental European countries, like the US side.
Yeah, couldn't we expect something? Chris has mentioned that throughout the program. So climate change. You know, we didn't have a climate risk insurance really in the past. Now we have it, and I think it's going to become much more imminent. I mean, I met the ambassador from Palau, who had on the back of his business card, you know, a little map where Palau is, because most people don't know it. And then his biggest issue was that his nation is sinking into the sea, quite literally. So I think we finally realized that there is climate change, and the insurance industry has picked up, you know, developed, you know, solutions for this. You know, obviously, admittedly, based on, you know, damage to property, etc., which came out of hurricane insurance. But is the climate change insurance or the developments in that space, is that kind of like a roadmap or a potential roadmap for what's going to happen with other business interruption insurance? Because there's so much under this umbrella of business interruption these days.
Yeah, and in Europe, not specifically for business interruption, but there is a debate and a kind of working group created by the European Union supervisor, insurance supervisor. They just began, you know, collecting information a few years ago on this regard. I think it was in 2015 or even 2014. But for the time being, they are just thinking about the problem, how to reduce to narrow the insurance gap, but they are not doing anything specific related to, you know, amendments on the European Union regulations related to the insurance, you know. And as Catherine has pointed out, you know, every European Union country has its own private insurance law. You know, so there is no mandate or a common framework for insurance contract at all. You know, what we regulate in Europe is how the insurance companies are and how they behave, how they are governed, the solvency, but not the insurance contract. So it's difficult for the European Union regulator to create an offer or to promote that the insurance sector in Europe can create an offer for climate change.
Yeah. Yeah, it's a major challenge because you know, if you want to organize this on a European-wide level, or for that matter on a US-wide level, you're immediately running into the dilemma that you know, the different states have their own regulation in the US, and the different member states have their own you know, insurance regulators. How do you I mean, something has to be done. I don't know, John, if you know, if you want to comment on that, how are bonds, is that what it is? How to insure against that, or what do you see happening?
I think well, at least in my little area, I think we're seeing more and more of the companies very active looking to insure green bonds. And also ESG. We have a lot of insurers looking to insure wind and solar power operations, and these are on a massive scale, both in the U.S., which we usually historically don't see, but they are looking to do that. So I think, you know, whether it's self-done or through outside pressure of investor organizations going to these insurance companies saying that they definitely have to bring up their ESG levels of what they're doing, and they're setting aside. And that's also going forward. And our colleagues in Europe probably could tell you some of the banks are under pressure that they have to lend a certain amount into the wind, solar, and new energy area, and that continues to go. I think and I think the insurance industry is just reactive to that. Eventually, I imagine they'll have to have some type of coverage, catastrophic wind damage, whatever the case may be, for some of these solar, for some of these wind power facilities that are off the coast, etc. It's still evolving. It's still evolving. We're in the United States here. They're talking about putting a lot of these things off the coast of New Jersey, and fishermen are now suing them because they're fishing grounds. And there's been some studies that say that some of the fish have an adverse effect with the electricity that goes on the ground. Whatever the case may be, I think we're still evolving in the natural energy. But the insurance industry is trying to keep up with it because of investor pressure, the ESG side of their business.
Interesting. Last word, final thoughts from everyone. Catherine, what do you think, looking through the crystal ball, what are you seeing happening in the next, in the medium term and then in the longer term in that space?
In climate change, is it?
No, in business disruption insurance.
Business interruption insurance. I think business interruption insurance as we knew it is no longer likely to be available at a cost which many would be prepared to pay for. And I think that where there is policy coverage, that it'll be a lot more sophisticated, and it will take account of the developments that we've seen over the last number of years, and will take due account of those developments and the risks associated with them. So it was an area, I think, that was there wasn't a huge amount of focus on it, and I think that's about to change. I think it's quite topical, but it will look quite different into the future.
Joachim, you see it the same way?
Yes, same way, and I will add also, that as I think Christopher has already mentioned, the concept of damages and physical damages, deterioration, is something that indeed we are going to debate in the insurance industry in the future, because in the past we had a very simplistic vision about what a damage is, and right now the pandemic has made us to learn difficult lessons on this regard. I think that in the future we are going to have a lot of debate related to damages as the trigger for business interruption. So yeah, this will be my final thought. Interesting.
Chris?
I would say that, traditional business interruption coverage will still be available going forward as it has in the past. But in terms of having, coverage for a pandemic or some virus-related activity, I think that we're probably at least, somewhere between 10 and 15 years away before I expect to see any type of specialty policies being developed that will have either large self-insured retentions or deductibles for the coverage. And then, limited scope of coverage tailored to specific type of pandemic or virus events. Because in my experience, what I see is that there's always, some entity that's willing to insure a risk for the right price. And so long as they get their hands around the risk, then they're willing, to take a chance on it.
Yeah, no, that's true. That's true. But a very interesting discussion, and definitely to be continued. We will probably, reach out to you, as things develop. And please all do keep an eye on the ground to see how. I think this is the first policymakers discussion, and then how the private sector is going to react to it. But a very interesting topic indeed, and I think there's going to be much more business disruption in the coming towards us. So we better find a solution other than self-insurance, because that's just going to be close to impossible. But so with that, we conclude today's webinar. Thank you so much to our panelists for sharing your insights on business disruption insurance. And reminder, if you're an EACC member and you would like to connect to any of the other participants, we're happy to facilitate that. We have a couple of really interesting programs in the pipeline. We're staying on the risk topic, assessing risk as a mosaic, how to risk-proof your organization for the future. That's happening on October 5th. We have EU Commissioner Merit McGuinness in town on October 11. And we have our annual Trust and Estate Planning for Expats on October 25th. And we will be uploading the recording of this discussion to our YouTube channel, and the link can be found on our website. With that, thank you again to our panel. Thank you to our audience, and enjoy the rest of your day.